An annual hull and machinery premium on a yacht in Turkey often falls somewhere between about 0.5 and 1.5% of the insured value, as of filming, with liability added on top. On a boat worth €400,000, that is a real line in your yearly budget. In this video I will cover the 2 layers of cover you need, the policy types you will be offered, what drives the premium up or down, whether a Turkish or an international policy suits you, and the clauses that cause most disputed claims. There is one condition in the wording that most owners never read, and I will come back to it. Start with the structure. Turkish marine insurance is built around a mandatory liability layer and an optional protection layer. The mandatory part covers damage or injury you cause to other people, boats, or property. It is a legal condition of berthing in most marinas and of holding certain vessel documents, so treat it as non-negotiable. The second layer is hull and machinery, often written H&M. That is the policy that pays out when your own yacht is damaged, by grounding, collision, storm, fire, theft, or engine failure where the wording covers it. It is voluntary, but serious owners almost always carry it, because the cost of a single grounding or engine casualty can dwarf several years of premium. Now the menu. When you compare quotes you will typically see 5 things. Third-party liability, the compulsory baseline. Hull and machinery for physical loss or damage to your own yacht and its equipment, usually written on an agreed value or a market value basis. Protection and indemnity, or P&I, which is broader liability covering crew, pollution and wreck removal, and is more common on larger yachts and commercial vessels. Personal accident and crew cover for the owner, guests, and any paid crew aboard. And extras, tender and outboard cover, personal effects, racing risks, and transit cover for a delivery passage or yard haul-out. A private owner cruising for pleasure usually needs liability plus hull and machinery. If you charter the boat or run it commercially, expect a different and often stricter policy, and expect questions about your commercial license and crew qualifications. What moves the number? There is no single national rate. As a rough guide, and as of filming, hull and machinery often sits between about 0.5 and 1.5% of insured value per year, with liability on top. Those figures are indicative only. They move with the vessel, the flag, the season and the insurer, so treat any quote as specific to your boat and get it in writing. Underwriters weigh 5 things. The value, age and type of the yacht, because a new build, a classic bullet and a high-performance planing boat are rated differently. Your cruising range, since a policy limited to the Turkish coast costs less than worldwide navigation. Your skipper experience, licenses, and whether a professional skipper is aboard. Where the boat is kept, because a secure staffed marina berth is viewed more favorably than a swinging mooring or an exposed anchorage. And your claims history and deductible, where a higher excess lowers the premium but leaves more of each claim with you. Local policy or international policy. Owners on the Turkish coast broadly choose between a Turkish market policy and an international marine policy placed through a specialist broker. Neither is automatically better. A Turkish policy handles claims locally, in Turkish, close to the marinas and yards, suits Turkish coastal use, and can be competitive on price, though limits may be lower on larger or foreign-flagged yachts. An international policy usually works in English, brings global surveyors and lawyers, handles wide Mediterranean or worldwide navigation better, and typically offers higher limits and broader P&I, though it may ask for more documentation. A foreign-flagged yacht kept in Turkey, or a boat cruising the wider Mediterranean, often fits an international policy better. A locally flagged boat that stays on the Turkish coast may be well served by a Turkish insurer. And if you are still choosing the flag, that decision interacts with insurance, so it is worth deciding both together. Put insurance in context. It is one line in the real running cost of a yacht, and it should be read beside the others. A yacht is generally a depreciating asset with ongoing costs, not an investment that holds value, so budget honestly. Alongside the annual premium, plan for berthing or marina fees, routine maintenance and anti-fouling, winterizing and haul-out, fuel, and crew if you use any. Insurance is rarely the largest of those lines. It is the one that protects all the others from a single bad day. We set these figures out in detail when we help a client with yacht management, so the yearly budget is clear before a purchase rather than after it. Here is the condition I promised. Most disputed claims come down to something in the policy the owner did not read. 6. To check, in writing, before you sign. Cruising limits. Confirm your normal routes and any planned passages sit inside the agreed navigation area, because straying outside it can void a claim. Layup and winter period. Some policies reduce cover, or expect the boat ashore, outside the season. Crew and skipper warranties. A clause may require a qualified skipper above a certain length or in certain conditions. Survey and maintenance conditions. The insurer may require a recent survey, valid gas and fire equipment, and up-to-date servicing. Named perils versus all risks. Know whether you are covered for anything not excluded, or only for a listed set of events. And deductibles and agreed value. Understand your excess, and whether a total loss pays an agreed sum or a market value you may end up arguing about. That is also why an independent survey matters. A recent, clean report reassures the underwriter and can smooth both the quote and any later claim. If you are buying rather than already owning, insurance connects to the wider due diligence. The vessel's VAT status. A clean title and lien check. The flag and registration. A proper independent survey and sea trial. And berthing availability, because where the boat sits affects the premium. Insurers price the risk they can see, so the tidier that paperwork is, the smoother the cover. Get those 4 or 5 items straight before you commit, not after. One thing to be clear about. Turkey Boats is an independent yacht brokerage, not an insurer, a law firm or a tax advisor. We do not sell policies and we do not give legal advice. What we do, and have done on the Turkish coast since 2016, is represent the buyer's interest. We explain the process, line up the survey and documentation insurers want to see, and introduce you to reputable marine insurance specialists. On a pre-owned yacht or a new build alike, cover should be part of the plan from the start, not an afterthought once the boat is yours. The full written guide is on our blog, and if you want to map the cover, costs, and catches to your specific boat, there is a link below to book a free, no-obligation consultation with a broker. Figures and rules change and vary by vessel and situation, so confirm your own position with a qualified professional.